Hey crypto lovers! Welcome back to your channel, AI FunTech. Today, we're diving deep into one of the most unexpected market tremors in recent times, DeepSeek AI and its impact on the crypto market. Buckle up, because this journey through innovation, volatility, and investor sentiment is going to be as wild as a roller coaster ride at midnight. Imagine waking up to news that a low-cost, open-source AI model from China, developed on a shoestring budget of just under $6 million, is shaking up global tech and even rattling Bitcoin. Sounds like a scene from a futuristic thriller, right? Remember, this isn't financial advice, so always do your research before investing. Today's story is not just about tech innovation. It's a tale of interconnected markets where a single disruptive event can send ripples far beyond its original sphere. Have you ever wondered how a breakthrough in artificial intelligence could send Bitcoin tumbling, even if the AI itself has nothing to do with crypto? Well, stick around as we break it all down. In the traditional narrative of tech and finance, the giants, think Apple, Nvidia, Tesla, and Microsoft, have long set the pace. But now, a new contender, DeepSeek AI, has burst onto the scene like a bolt out of the blue, challenging decades of spending wisdom in AI development. And guess what? The crypto market, known for its risk-on attitude, couldn't help but feel the aftershocks. Today, we'll explore: what exactly is DeepSeek AI and why is it generating so much buzz? How did its sudden debut lead to a ripple effect across both tech stocks and cryptocurrencies? What does this mean for the future of crypto, and should we be worried or excited? Before we dive deeper, here's a quick pause for a fun thought. If DeepSeek can do more with less, does that mean your old laptop might soon be as smart as a supercomputer? DeepSeek AI is an open-source artificial intelligence model that has taken the tech world by storm. Developed by a relatively small Chinese startup, it challenges the conventional belief that building competitive AI requires billions. Instead, DeepSeek's cost-effective model has been compared to AI's Sputnik moment, a wake-up call for established Western tech companies. Imagine a scenario. While traditional models require sprawling data centers and astronomical budgets, DeepSeek emerges as a nimble contender, developed with significantly fewer resources. It's like discovering a gourmet meal made entirely out of leftovers that somehow tastes better than the expensive restaurant dish. What makes DeepSeek so captivating isn't just its low cost, it's the fundamental shift it represents. By proving that high-quality AI models can be built on a lean budget, it forces industry leaders to rethink their strategies. This democratization of AI development means smaller players now have a chance to innovate without being bogged down by enormous expenditures. But here's the twist. While DeepSeek directly targets the AI sector, its ripple effects have unexpectedly touched the crypto world. How? Let's find out. Cryptocurrency, especially Bitcoin, has long been known as a risk-on asset. This means that when investor sentiment turns cautious in traditional markets, crypto often follows suit. When DeepSeek was announced, its shockwave didn't just hit tech stocks. It sent Bitcoin and other digital assets on a short-term roller coaster. For instance, on the day of the launch, Bitcoin experienced a roughly 6% drop, briefly slipping below the $100,000 mark before recovering later in the day. Think of it like this. If tech stocks are the ripples in a pond, then Bitcoin is the leaf floating on the surface. When a stone, like DeepSeek, disrupts the water, even if the leaf isn't directly connected, it gets jostled around. Interestingly, despite DeepSeek having nothing to do with cryptocurrencies per se, the correlation between tech stocks and Bitcoin became starkly apparent. Analysts observed that the 6-month rolling correlation between Bitcoin and the Nasdaq Composite surged to levels not seen since early 2023. In a market where sentiment is king, even seemingly unrelated news can trigger a domino effect. This phenomenon underscores a key point. In today's interconnected financial ecosystem, shocks in one sector can inadvertently impact another. When investor confidence in technology wavers, risk-on assets like crypto aren't immune to the fallout. Investor sentiment is an intangible force that often drives market movements more than concrete fundamentals. When DeepSeek's low-cost, high-efficiency approach was unveiled, it caught many off guard. Suddenly, investors started to question the future dynamics of AI and, in turn, the stability of tech stocks. And since Bitcoin tends to mimic tech sentiment, the digital asset market reacted swiftly. I remember the first time I heard about DeepSeek. It felt like watching a sci-fi movie where the underdog challenges the overlords. Suddenly, all the chatter in trading forums and social media was about whether this was the beginning of a paradigm shift or just a fleeting anomaly. Let's take a quick breather here. Picture this. You're at a party and someone starts raving about a miracle diet pill that lets you eat junk food without gaining weight. Naturally, you're skeptical, right? That's exactly the reaction many investors had when DeepSeek made its debut. It's the classic too good to be true scenario, until you realize it's not about the diet pill at all, but about how the idea challenges your assumptions about what's possible. This lighthearted moment reminds us that in the fast-paced world of crypto and AI, sometimes you've just got to laugh and keep your wits about you. When fear or uncertainty creeps into the market, investors quickly shift gears and sell off riskier assets. Bitcoin, which many consider a store of value, still isn't immune to these market dynamics. As investors observed the tech sell-off triggered by DeepSeek's launch, a wave of risk-off sentiment swept through the market, causing a temporary dip in crypto prices. Moreover, some analysts noted that disappointment over political announcements, like the underwhelming details in President Trump's recent crypto-related orders, further compounded these negative sentiments. It's a cocktail of factors that, when mixed together, lead to synchronized sell-offs across asset classes. While the immediate reaction to DeepSeek was a short-term sell-off, many experts believe the long-term implications for the crypto market may be less severe. In fact, some argue that cheaper AI could eventually benefit crypto markets by spurring innovation in areas like trading algorithms, risk assessment, and even blockchain scalability. Imagine if decentralized applications start integrating these cost-effective AI models to analyze market trends in real time. It could lead to a more dynamic and responsive ecosystem, where algorithms help investors make more informed decisions, even during periods of high volatility. One fascinating concept coming into play is the Jevons paradox, which suggests that increased efficiency in using a resource can lead to an overall increase in its consumption. In the context of AI, this means that as models like DeepSeek lower the cost of development, the overall demand for computing power and energy might actually rise. This has interesting implications for both data centers and crypto mining operations, many of which are already exploring ways to repurpose existing infrastructure for AI workloads. As AI and crypto continue to evolve, we might witness a fascinating convergence. Picture a future where blockchain networks integrate AI to improve security, optimize smart contract execution, and even predict market trends. The open-source nature of DeepSeek invites collaboration and experimentation, potentially leveling the playing field for smaller developers and startups. This could lead to a more democratized tech landscape where innovation is driven by community collaboration rather than massive capital investments. Let's indulge in a little what-if scenario. Imagine waking up a few years from now to find that your everyday crypto wallet is powered by an AI engine that not only secures your assets but also predicts market movements, adjusts your portfolio in real time, and even negotiates trades on your behalf, all at a fraction of the cost once deemed impossible. Sounds like a scene from a futuristic movie, right? This is the kind of transformation that could reshape the digital asset space, merging the best of AI's predictive power with the decentralized, borderless nature of crypto. Of course, with every technological breakthrough come risks. The meteoric rise of DeepSeek has also attracted its share of nefarious actors. We've seen reports of scam tokens, phishing attempts, and even malware riding on the hype of this new AI model. It's a stark reminder that in the crypto space, if something seems too good to be true, it might just be a trap waiting to be sprung. It's like when you see a free giveaway online, you have to double-check, or you might end up clicking on something that drains your wallet, and not in the digital sense, but the real one too. For those of you in the crypto space, here's a quick tip. Always be extra cautious when interacting with new projects or unverified platforms. Ensure you're using trusted sources and double-check URLs before clicking on any links. Enable two-factor authentication, 2FA, on all your accounts and never share sensitive information. In this rapidly evolving landscape, staying informed is your best defense. Remember, the hype can be a double-edged sword. While innovation drives progress, it also opens up new avenues for fraud. Despite the initial shockwaves, the crypto market has shown signs of resilience. Bitcoin, for example, quickly rebounded after its brief dip below $100,000, demonstrating that while sentiment can swing dramatically in the short term, the fundamentals remain strong for many digital assets. Several analysts suggest that the long-term impact of DeepSeek on the crypto market will be minimal. In fact, some see it as an opportunity, a catalyst that could drive further innovation, lower operational costs, and even enhance market efficiency over time. Let's be honest. In the world of crypto, predicting the future is as tricky as herding cats. But one thing is clear, market dynamics are shifting, and we're witnessing the birth of new narratives. Some seasoned traders are optimistic, noting that the temporary sell-off presents buying opportunities. Others remain cautious, emphasizing that macroeconomic factors like interest rates and regulatory developments continue to play a significant role. I remember a time when I doubted the resilience of Bitcoin during turbulent times. Each downturn, however, reinforced my belief in the long-term promise of decentralized finance. And while DeepSeek's arrival has added another twist to the plot, it's a reminder that volatility is part of the crypto journey. So, what have we go through today? DeepSeek AI, with its cost-efficient breakthrough, has certainly stirred the pot in the tech and crypto markets. While its immediate impact led to a noticeable dip in Bitcoin and other digital assets, the long-term implications appear to be more about innovation than destruction. The crypto market's reaction was driven by risk-off sentiment, a reminder of how interconnected our financial systems have become. We've seen that DeepSeek is challenging traditional AI development models, potentially lowering barriers for innovation. Its launch triggered a temporary sell-off in tech stocks and cryptocurrencies due to investor sentiment and market correlations. The long-term impact on crypto prices is likely to be minimal, with many experts viewing this as a wake-up call rather than a permanent setback. As always, risks abound, especially from scams and security threats, so vigilance is key. If you ask me, moments like these are what make the crypto world so exhilarating. Sure, there are bumps in the road, but each one offers an opportunity to learn, adapt, and ultimately come out stronger. I see DeepSeek as a catalyst that could accelerate innovation, not just in AI, but in the way we interact with digital assets. It's a reminder that sometimes the biggest challenges lead to the greatest breakthroughs. Before we wrap up, I want to remind you one more time. Remember, this isn't financial advice, so always do your research before investing. If you found today's deep dive insightful, please leave a comment below with your thoughts and questions. What do you think about DeepSeek's potential to reshape both the AI and crypto landscapes? Have you noticed any interesting trends in your own trading experience? I'd love to hear your take on this roller coaster ride of innovation. Don't forget to hit that like button, subscribe to the channel, and ring the bell for notifications, so you never miss an update on the latest crypto trends. And if you're hungry for more in-depth analysis, check out our related videos and playlists right here on AI FunTech.